Hi everyone, welcome back to my channel. Today we're going to be talking about one of the most exciting and dynamic areas of finance, the stock market. Whether you're an experienced investor or just starting out, the stock market offers endless opportunities for growth and financial success. But with so many options and so much information to sift through, it can be difficult to know where to begin. That's why, in this video, we'll be exploring the basics of stock market investing, from understanding how it works to choosing the right stocks for your portfolio. So, if you're ready to learn more about this exciting world of finance, like this video, subscribe to our channel, and let's get started. There are many inspiring stories of people who got rich by investing in the stock market. One such example is Warren Buffett, who is considered one of the greatest investors of all time. He started investing in the stock market at the age of 11 and has since built a fortune estimated at over $100 billion. Another example is Peter Lynch, who was a successful fund manager at Fidelity Investments. He produced returns of over 29% per year during his time at Fidelity and became known for his approach of investing in companies he understood and believed in. These stories show that anyone can achieve success in the stock market with patience, discipline, and a willingness to learn. So, what is the stock market? The stock market is a platform where stocks of publicly traded companies are bought and sold. The stock market is like a giant auction where the price of a stock is determined by supply and demand. When more people want to buy a stock than sell it, the price goes up. And when more people want to sell a stock than buy it, the price goes down. Why invest in the stock market? Investing in the stock market can be a great way to grow your money over time. Historically, the stock market has produced higher returns than other investments such as bonds or savings accounts. The stock market can also provide diversification, which means spreading your money across different investments to reduce risk. How to start investing in the stock market? If you're new to investing in the stock market, here's what you need to do to get started. 1. Open a brokerage account. You can open a brokerage account online with a company such as Fidelity, TD Ameritrade, or E-Trade. 2. Fund your account. You'll need to transfer money into your brokerage account to start investing. 3. Research stocks. Use resources such as stock market news and analysis websites, or consult with a financial advisor to research potential stocks to invest in. And 4. Buy stocks. Once you've found a stock you're interested in, you can place an order to buy shares through your brokerage account. How much money should you invest in the beginning? There's no one-size-fits-all answer to this question, as it depends on your personal financial situation and investment goals. However, it's generally a good idea to start with a small amount of money and gradually increase your investment as you gain more experience and knowledge. It's also important to have a diversified portfolio, which means spreading your investments across multiple stocks and industries. Where to learn about the stock market? There are many resources available to help you learn about the stock market. You can start by reading books, articles, and online tutorials. You can also take online courses, attend investment seminars, or consult with a financial advisor. The key is to educate yourself as much as possible and continue learning as you go. Risks and benefits of investing in the stock market. While the stock market can offer the potential for high returns, it also comes with risks. The price of a stock can go down as well as up, and you can lose money if the stock you invested in performs poorly. It's important to understand that investing in the stock market is not a guaranteed way to make money, and it's important to have a long-term investment horizon and to be prepared for market fluctuations. Low-risk stocks and high-risk stocks. Low-risk stocks are stocks from well-established companies that have a history of steady earnings and a lower likelihood of experiencing significant price swings. High-risk stocks are stocks from companies that are more speculative and have a higher potential for large gains, but also a higher potential for large losses. It's important to consider your personal investment goals and risk tolerance when deciding which types of stocks to invest in: the S&P 500 and NASDAQ 100. The S&P 500 is a stock market index that represents the performance of 500 large companies listed on the New York Stock Exchange, or NASDAQ. The NASDAQ 100 is a similar index, but it represents the performance of the 100 largest, most actively traded companies listed on the NASDAQ Stock Exchange. These indices are considered to be good barometers of the overall health of the stock market and can provide a good starting point for your stock market research. In conclusion, the stock market can be a great way to grow your money over time, but it's important to educate yourself and understand the risks involved. Start by opening a brokerage account, funding it, researching stocks, and investing in a diversified portfolio. Remember, investing in the stock market is not a get-rich-quick scheme, and it's important to have a long-term investment horizon and be prepared for market fluctuations. Don't forget to like this video and subscribe to our channel for more great content on the stock market and other finance topics. Thank you for watching, and we hope you found this video informative and helpful.